Hello again, everyone. Welcome back to the weekly analysis for the upcoming trading week. This week, we are starting a new month, and we will be starting on the 2nd, which is tomorrow, and it will run through Friday, the 7th of March. So as usual, before we begin, let's just pray. God, we just thank you again for another opportunity to trade. Thank you again for a new month, a new week of possibilities and opportunities. We ask that you will be to anyone watching this video, may be beneficial to them, and may we continue to improve on our trading experience and help us to be patient and confident in the structures and the strategies that we build. Thank you. We love you in Jesus' name. Amen. All right, guys. So this week marks the beginning of the new month, the third month of the first quarter in 2025. Okay. And as always, I'll start off by saying that my bias, on the NASDAQ 100 is eternally bullish. Okay. I just want to get that out there. My bias is eternally bullish. Now, in being eternally bullish, you have to understand that you must wait for your largest higher low before taking trades on a buy. Okay. Now, the correct way to do this, and I've been saying this for months, okay? And I think what happens is that a lot of people don't take the time to understand a particular strategy that they're working on. And when they make mistakes, they say, oh, the strategy was wrong. Absolutely not. Every time when you lose a trade, it's you. It's never somebody else. It's never the strategy. It's you. You are the one that's creating the strategy. You are the one that's making these decisions to go into the strategy. Now, let me clarify what I mean right there. If you're trading higher lows to higher highs, that is the market, okay? If you get in on a higher low and you realize that the market only makes a lower high, it simply means that the market is still consolidating and you need to take your profit, wait for your next higher low before taking another buy. Every time the market makes a lower high, it means that the market is still consolidating within a range, and as such, it is an indication that you need to take your profits because the buys are not ready as yet. Okay? So, if you take a lower low, in this case, it's going to be a higher low on a larger time frame. And I'll just do a quick one for you right there. So let's say last week, okay? And remember, I always say, anytime you see a lower low or a low on a particular time frame, always zoom out and look at your larger time frame to see how the trade is playing out on that time frame. So let's mark this lower low point right here. All right. So that's a lower low point of last week. How does that translate on the bigger time frame? Because of course, if you're looking only at your 1 hour time frame, this is going to tell you that the market is in a bearish mode. So I go up to my 2 hour and I see the same lower low on my 2 hour time frame. So I'm like, okay, fine. 2 hours actually in lower high, lower low mode. Okay. I look at my 3 hour. How does that play out? Well, on the 3 hour, the market is still going down. It's still making that low. Okay. I look at my 4 hour time frame. Okay. It's the same thing. So, of course, what I forgot to do was to actually put the point, put my historic point, so I could show you what's going on here. Okay, so here we go on this lower low point that I marked. So again, going on your 2 hour time frame, that's a lower low. Going on your 3 hour time frame, that is a low. Going on my 4 hour time frame, that is a low. 5 hour, that is a low. Going all the way up, I'm skipping some time frames now. I'm going up onto my 12 hour. Now I'm at a higher low point. Okay. 11 hour is at a higher low point. Okay. Going all the way up to my 23 hour. Okay. That is a higher low point. Going all the way up to my day. That is a higher low point. Okay. So what that tells me when I look at my weekly time frame, okay, well, the weekly time frame will show the higher low because the weekly time frame will only show you what the candle actually did for that particular week. So on this 1 hour, which I am right here, which is a lower low, it translated to a higher low on my 23-hour time frame. Okay. Now, if I take this trade based on this higher low, okay, candle expired this at a higher low, and I take this trade. So let's go back to the 1 hour time frame, which is where it's all at. Okay. Look at what happens. So the market, it buys, all right? There's some amount of buying that takes place. Okay. And the market buys. Okay. Notice market made a lower high right there. So if I came in from here and the market is here and I see that it's only making a lower high, that tells me that the market is still consolidating and the move, the retracement is still happening. So all I will do is take my profits right here. I take my profits and I'll wait. Okay, it's as simple as that. All right. So that is basically what I mean when I trade an eternally bullish instrument where I'm taking only my higher lows on my largest time frame and I'm continuing up towards an all-time high or a higher high. However, if the time frame I entered on creates, and it's the largest time frame, granted, creates only a lower high, okay, then I know that I'm taking my profit because I will be in profit. Because again, if I came in here, okay, let's say I came in right here. Notice the market went up and did some consolidation, but when consolidated, I was still in profit. And then it finally came here, okay? That's 1,800 pips right there, okay? Take your profit and wait, all right? Look at what happens now. So the market did this. Went up, it pushed up. Now you notice it created another higher low, another opportunity for me to actually take a trade. It came up, it made a high. Okay, that high right here that it made, using my tool again, this high that it made right here was only a lower high on a larger time frame. So let's look at my 2 hour. There you go. 2 hour only made a higher low. Look at my 3 hour. There you go. 3 hour did not make anything. So again, my largest higher low. Take your profit right there and wait. That's it. So I know that I'm in the trade and everything like that. And I took my profits right there. I'm not selling because I don't want to go against the trend, the master trend. Granted, the sell opportunities will exist and people are like, why won't you take all of these trends? Well, for me, all these sells. For me, it's not about the counter trend trades. I want to take the trends that are going towards the trend. So I'll always be in profit and I'm always guaranteed wins on my trades. Again, like I said, if you take a higher low and the market only comes up and gives you a lower high, take your profit and wait. So look at what happens. So the market did that. Let me just go back to the 1 hour where it plays out. So here was the high, was the lower high on the 2 hour. Look at what the market did. Nice sell. It came down. It made another low right there. Okay. When I look at my 2 hour, how does that translate? On my 2 hour, it made a lower high. Sorry, a higher low right there. Okay. So again, looking at your 3 hour, you see that on your 3 hour, this pressure, this tells you right here that the pressure is still going down. So it's not about rushing the higher lows. It's about being patient to get them. Okay. There's no rush in getting into the trades. The problem a lot of people have is that they want to overtrade. They want to trade every single minute of the day and they're not patient in waiting on those trades. In order to get the proper higher lows, you have to wait. You must wait. Okay? So it doesn't make sense in trying to take 3-4 trades for the day and everything when you can just get one move for the day and you'll be perfectly fine. You just wait. Okay? When you look at this, always look for times when the market does certain things. Because remember I said in previous videos, the market does the same thing every single day. You're just going to have to be patient enough to wait for those things and to be able to analyze and see what happens at particular times in the market. All right. So here we go again. So for example, this day, I would have had a trade right here. Okay. Now, market came down here. It made this low. Look at what the market did again. So it did all of that. It came up, it made another lower high. Now it came down to the lower low. Okay. So the market is still going down. So it's a matter of waiting. And again, always zoom out and look at your largest time frames. You see what happens now? Now you see here that the market actually broke structure on your daily time frame, and it's now giving you a new low. Okay. But in order for the trend to be confirmed, okay, after this initial break, you must have a lower high and then a lower low in order to confirm the trend. All right. So let me zoom out where I can show it to you in real time on the 1 hour time frame. All right. So here we go. So once you look at once you look at your 1 hour time frame, here's what you'll see. You will see here at first, let me show you how to identify a structure break. Let me get these things off here. Let me get these off, go back to my 1 hour, and I want to show you what a structure break looks like. All right. Here we go. Get these off. All right. So in order to have a structure break, right, you must first have a new low. Okay. So if you notice, price was here. Okay. Came down, it made a new low. That's the first sign that the market wants to break structure. So you have a new low. It must start with a new low. As soon as you have this new low, look at what happens. Market goes up, it makes a lower high. Okay. After it makes that lower high, boom, it comes down, sorry, comes down and makes a lower low. Now you have a confirmed down structure. Okay. So you have a new low, then you have a lower high, then a lower low. And then it continues. Lower high, lower low, lower high, lower low, lower high, because this new high is lower than the last new high. Then you have another new low, lower high, lower low. Okay. Again, here's the confusing part. This is only the 1 hour. So the smaller time frames, in this case, like the 1 hour, will continue to show you that it's making lower high, lower lows. However, you want to zoom out and look at your largest time frame to see how that is playing out. So again, here we go. Going to my larger time frame. Let's look at my daily. Okay, there I have a new low. So in order for this to confirm that it's breaking structure, I need to get a lower high to a lower low. Okay, look at my weekly. All of that selling only created a higher low. And again, zoom out and look at what the market has been doing. Higher lows, higher highs. That's it. That's all that the market has been doing. So remember, I mentioned to you guys way back in last year that I had a trade from back in August. I've been bullish since August. This is the higher low in August of 2024. So if you took this trade in August 2024, with all of that selling that happened last week, you'd still be in profit. So like I guess what I'm trying to say, guys, is I look for the easiest path of least resistance. So I look for the easiest thing to trade on the charts. And the easiest thing to trade on the chart is the buys. Again, if you focus on your smaller time frames, you will always see indications that the market is at some point bearish. But all you have to do is zoom out and you will see that the market is constantly making higher lows to higher highs. Here we go. Let's look at the 4 hour. Here we go. This new low that came on Friday, that finished on Friday, is still higher than all of these previous lows. All right. So enough of that. What am I expecting for the upcoming week, and what am I seeing on the charts? Well, for starters, on Friday, the monthly candle closed Okay, that was the last day of the month on Friday. So the monthly candle closed. The weekly candle also closed. Okay, but the weekly candle actually closed at a higher low. Okay, so that's significant. So the weekly candle closed at a higher low. The daily candle closed, and every single candle below the weekly candle and the monthly candle actually expired on Friday. Okay, what does that mean? Well, you have to look at what position they closed in. And to do that, you start from your largest time frame, top-down analysis. Again, on your monthly, here we go. Nothing was registered on the monthly. Absolutely nothing was registered on the monthly. So again, you want to look at your last 2 points. So my last 2 points, previous points to here, were higher lows, higher highs. That tells you that the market is still in a bullish push. It's eternally bullish. Higher lows, higher highs, your last 2 points. Okay, but no new point has been registered on the monthly, and the monthly expired on Friday. Okay, now, next thing that you want to do is you come and you look at your weekly. Well, your weekly candle expired on a higher low. Came down here, it wicked out, it stopped at 2867.6. Look at your last 2 points. My last 2 points were higher high, higher low. Tells the story right there. The market is still bullish. Okay. Go down to my daily. Okay. Look at my last 2 points. It finished at a new low. But I look at my last 2 points. And my last 2 points here tells the story. Again, higher high, higher low. Okay. All right, so it tells you the biggest 3 time frames tell the story. Right there, the market is still bullish. Okay, you go down the line. Let's say you go to your 4-hour. Okay, let's go to the 4-hour time frame. Okay, so your 4-hour time frame is at a new low. Look at the last 2 points. It's lower high and it's at a higher low. What do these 2 points tell me? Market is consolidating. These are 2 consolidation points right here. Okay, consolidation points. So the market is still making higher lows, but it made a lower high. Okay, then you see came here and it made this new low. But this new low is actually high when you actually compare it to the last 10 lows on the 4-hour. The lower you go is the more noise you're going to get on your time frames. All right, so never forget that. All right. And of course, just for kicks, let's go on the 1-hour time frame and look, do the same test. So of course, market here made a lower high. Look at my last 2 points on my 1-hour. It's telling me here that it's making lower low, lower high. So on the 1-hour time frame, yes, the market is in fact bearish. However, when I look at my larger and my biggest time frames, it's telling me the story that the market is still bullish. So right now, it's just a matter of waiting for the retracement to be over and the consolidation on your mid time frames before actually continuing. Now, with all of that being said, and I apologize, this video, I had to go into a little explanation to help people understand what it is that you're seeing on the chart. Trading is not about panicking. It's about being patient and maintaining your composure. Once you understand what you're trading, it becomes easier for you to wait, and you don't need to react to every single move that the market does. It's about waiting for your right setups. Now, you would have noticed in the past couple of weeks, a couple of months, that I've drawn a particular Fibonacci on my daily time frame, and I'll go back to it. So my last major low that was made, this was back in October 31st of 2024. It came up, it made this high. Okay, and the market basically consolidated before going to breaking and posting another all-time high. Now notice, as soon as it posted that all-time high, the market has been in a downward spiral ever since. okay, not to worry. It's still a higher low on the larger time frame. However, key points that I want to bring out to you. This was the low point. This was the high point. Okay, this is my fibs that I'm operating with. Okay, whenever you draw your fib lines, and there's a video that I've posted on my YouTube previously, which actually explains the fib levels that I use on the NASDAQ 100. Now, the NASDAQ 100 always likes to retrace between the 61% and the 78.6% lines. Okay, this was my fibs that I drew right here. All right, from the 100 point all the way up to the 0 point. Notice first time price came down and it actually consolidated. It retraced to the 61% line. Okay, from here it went up, consolidated for a number of weeks until it made another all-time high. Retraced, came back, broke that level at the 61%, came right down to just above the 78.6% line. So it's perfectly understandable that the market is in fact trading within the range of the fibs. So it came back to the 78% last week, and that's perfectly fine. Now, one of the things that you will understand now is that once the retracement is over on the fibs, your take profit points are going to now be your minus 27%, your minus 68%, and beyond. Okay? That is how the retracement works. That is how the retracement feature works when you're using the Fibonacci. You must understand where your key levels are and understand how price interacts with those key levels. So the fib that I had, it broke the 100%, all right, made that new all-time high, but it didn't last for long. It came back and it did a hard retrace, which is what we saw completed with the month ending on Friday. So now, because it got to this level and because it registered the lows now on the weekly time frame all the way down to the minute time frame, now you see here right at the 78% level, now you see that push towards going back to breaking your all-time highs again. Now, you don't have to take my word for it. Just look at what happened. Last time price came down here, every single time price comes in this region right here, it gets that rejection, it finds support, and it continues up. Last time it was here, it found this higher low, it made a higher high. Okay, came back down to this higher low region right here. Look at what it did. It came right down and wicked out. So let me draw a line and I'll show it to you. Let's put a line right here, right to this level right here. Okay, let's change that to red just for emphasis. Price came down here and it did that. This is where it found support on the daily. The last time it found support was right here. So again, looking at it, this was the low that it's coming from. It went up, it made an all-time high. Came back down, it didn't come down here. Notice it didn't come back down here because it's making higher lows. Okay? So it came here, it found support. And from this area, it pushed up, came back down, didn't come back to this area, it wicked out, consolidated before going up to make that all-time high, which is the higher high. Okay? That's normal. That's what the market is doing. Came back down to this level. Okay? Notice it wicked out. Wicked out, came up. Pushed down again, tried to go down and break that support, but it wicked out again and actually started on that bullish run on Friday. Okay? So right now it tells you that the bullish run is going to continue for a number of reasons. You're now at your 78%, which is normal retracement territory for the NASDAQ 100. 61.8, 78.6. You're in retracement territory. Price came and rejected. Now, every single time that price came in this region, it has been rejected. So now you're going to see that push towards the upside. Now, again, if you come in here and you notice on your daily that it only came up to, let's say, the 23% and made a lower high, guess what? Take your profits for heaven's sake and wait. Because the market will come back down to make a higher low on your larger time frame. Now, one thing I will say to you, is if you look at your weekly time frame, and if for some reason you see your daily here coming back up and making only a lower high right here or in this region before getting to this all-time high, guess what? Take your trade, sorry, take your profit, because that says to you that the market is still consolidation, in consolidation mode, and the market is still retracing. So once you get a lower high right here, okay, it's okay to take your profits and wait. You will be in very good profit if you come all the way up here, waiting for those higher lows. Because if the market does that and comes lower highs to lower lows, then it tells you that, okay, fine, my daily is now in a downtrend, okay? However, you always zoom out and you look at your largest time frame. As long as your largest time frame is still in structure on your higher lows, guess what? You're going to be okay. All right? You're going to be okay. Now, another thing that I want to show to you is, of course, if your weekly is on a higher low, you want your daily to actually be on a low. And your daily on a low, this tells you right here everything that you need. This low was created by breaking a previous higher low. So essentially, this new low is only a higher low on your weekly time frame, which is here. The monthly has not come into question yet, okay? And I don't see the monthly coming into the equation right now unless the weekly goes up and actually, you know, creates a lower high, which is very unlikely right now because your last point of your last significant point was the last all-time high. So I expect that the price is going to come back and break this all-time high that it previously created. All right. So I hope that that has been clarified and that we understand what's happening. So continuing into next week. So now that here is a lower low, okay? The 2 hour is at a lower low. The 3 hour is at a new low. However, it's a segmented low formed by coming and taking out all these previous higher lows right here, okay? Your 4 hour, it's the same thing, it's at a low. Your 5 hour is at a low. Your 6 hour is at a low. The 7 hour is at a low. Your 8 hour, all the way up until your daily, is at a new low. The significant thing about that is on your weekly time frame only registered a higher low, which is your largest higher low that you're looking at right now. And remember, I've always said you want to be buying from your largest higher low and continuing to your all-time high. Okay? So, your weekly expired on Friday. The candle closed, which means the higher low that it signaled has been closed. In my estimation, has been validated. So I took that trade on Friday. Okay. Now, if the market continues to display lower high qualities on my entry time frame, in this case, my 1 hour time frame, my 2 hour is what I entered on, based on those lower lows that it created on Friday, which translated to the higher lows. If those time frames continue to show me lower highs, then I understand that the market is still consolidating. I will take my profit and then wait for the next higher low on my larger time frame or lower low on my 1 to 2 hour time frame. Because again, I'm not analyzing on my 1 to 2 hour. My 1 to 2 hour is just carrying out what has already been established on my largest time frame. Currently, it's my weekly time frame that has expired on the 28th of February, which is Friday, where the monthly also expired, the daily also expired, and every single time frame behind that has expired on Friday, the 28th of February at 5 p.m. All right. So real quick, going back to my 1 hour. Entries on my 1 hour. Let me tell you. Entries on my 1 hour time frame. Those were on Friday. So I'm going to put those lines in. So I have them. So my first one, which was this blue line right here, is 2559.6. So we go here, put that in. Let's do the blue. And we do this thickness. So paste that. 2559.6. Okay, 2559.6. Let's take that out. Ooh. Let's put that again. 2559.6. That was one entry. And then the second entry was here, which is 2625.1. So, all right, so those are the two entries, all right, that I took on Thursday. Well, one Thursday, one Friday. All right. So that's where I am right here on those entries. Now, what am I looking for? And the reason why I took those entries, why? Because every single thing from my weekly all the way down, my weekly starting at a higher low, everything below it was at lows and lower lows, which is where I want to be for my entry. All right. Any higher low that I'm taking a trade on, it needs to be the largest higher low, the largest higher low at the time. That's where I want to be. Okay. So I can't be taking a higher low on let's say a 1 hour time frame when the 3 hour is also at a higher low. No. I need my 1 hour at that point in time to either be at a low or a lower low before I'm taking that trade. All right. In this case, my 1 hour is at a lower low. My 2 hour was also at a higher low. Okay. Everything else above it was at lows. Okay. Nothing below my 2 hour was actually at a lower low point. So this tells me that right now I'm coming from the bottom of this particular retracement. All right. So a trade like this is a good swing trade for me to just basically hold and just leave it. Okay, unless, like I say, unless my daily or my weekly goes up to give me a lower high or to give me some indication that this market is coming down, this is a trade that I'm pretty much going to be holding. All right. So the last thing I'm going to do before going is to basically put back my levels. All right, my 2025 levels that I have always stuck by since last year. So the first TP level is going to be here. And let's see, this is going to be 22273.4. All right, so we just put those in. Let's change the color on that. All right, so that's my first one. It's right above the last all-time high. My next line is going to be TP2, which is going to be 22736. So we'll do the same thing here. All right, which is right on the fib line right there. That's at the minus 27 fib line. And then my next one, which is going to be TP3. TP3 is going to be and that's going to be at 22,988.5. And TP4 is going to be at my minus 61% line. Put that in here. Okay, and the last TP that I had is going to be TP5. Which is going to be at 24,368.9. 24,368.9 is right there. And that is basically go in and copy over all my levels. So I'll do this. Let me try and see if I can copy everything together, if it would allow me. Let me see if it does that. Copy. Let's see if it does it. Oh, awesome. Never tried that one before. So instead of doing them individually, I could have just done them all at once. So I'll just switch these and put them here so they correspond with my levels. These are just the levels that I had indicated, I think the last day of 2024, where I'm expecting the NASDAQ to go in 2025. And of course, you know, no particular timeline. However, I know at some point in time, those highs are going to be broken. So, you know, it's just a matter of being patient and just waiting for that to happen. And that's why I keep these levels. All right. So I know this video is a little bit long. However, so notice this is where the market ended on Friday. Okay. You know, people say a lower high, wouldn't you take your profit here? Well, okay, that's an argument, but at the same time, having constantly watched the NASDAQ over the past months, over the past years, I'm expecting that this is going to actually continue. So I'm expecting a gap up on Sunday, which is tomorrow, and I'm expecting it to actually continue pushing up. And the reason for that is, of course, my 1 hour and 2 hours are coming from low time point. Lower highs, lower low positions. So which means, remember, I can't sell from a low. I have to buy from a low. So the 3 hour is still at a low point. I can't sell from a low. Okay? Can't sell from a low. I have to buy from a low point and sell from a high point. So with all of this right here, okay, now is not the time for me to be selling. Okay? I am not looking to sell this market right now. I'm looking to buy this market because it's at a low point. Okay. Remember, Mondays, Tuesdays, and sometimes Wednesdays, the market tends to consolidate, tends to take out liquidity, and it tends to be extremely volatile. So Mondays, Tuesdays, if you're not in the market, make sure you understand that you want to get in at your lowest point in order to capitalize on the buys. If you're looking to sell the market, you need to wait until your highs have been completed and then you sell from your highs. You want to buy, wait until the sells have been completed and then you buy. No rush, okay? And if you're going to be trading a consolidation market, always go towards the trend. Okay? Always go towards the trend. The trend is your friend. Take your higher lows. If the market makes lower highs, take your profit, wait for another higher low. It's guaranteed. It's the easiest and only guaranteed way to actually trade this market stress-free. Okay? Not saying that sells do not exist. However, like I mentioned to you, any sells in the market are only temporary retracements in order to create a higher low on your largest time frame. Well, don't believe me? Let's look at it. All this sell coming from this all-time high right here, okay? Look at it. On your largest time frame, that was only a higher low. So in the last 2 weeks, it was only a higher low that was created. And check your last two time frames. I mean, your last 2 points. Higher high, higher low. That tells you all you need to know. The market is continuing to be bullish. Don't believe me? Zoom out. Always zoom out. There you go. The market has always made higher lows to higher highs. Even with this sell right here, it was still higher than this low. Don't believe me? Take a trend line. I always tell you, I don't use trend lines as much as I should, but always use your trend line. Here's your trend. Okay? That's your trend right there. I'll do one other thing, since we're on trend lines. Let's look at my daily where I actually drew that fib. Okay? So, again, if you're going to draw your trend line, look at what happens. So if I came here from my low to this low and everything, right? Notice that the trend line has been broken right here, right? Trend line has been broken right here, okay, on my daily, okay? All right? And you may say, well, it's going to continue down. Okay, fair enough. Trend has been broken right here. However, you go to your larger time frame because guess what? Your larger time frame actually signaled a higher low. So how does that relate to anything? So you go on your weekly time frame. Okay. And here is what you are going to do on your weekly time frame. Is again, you want to match all your points. So on your weekly time frame, you draw a trend line from here, from your low all the way to your low. You can actually extend this all the way out. Now look at what happens. Since the last time, I'll put this in black. So you'll be able to see it since black is my weekly line. Put this in black. Notice price came. All right, this was the second point on the trend line. Came, it broke through the trend line, and it broke back above. It's been continuing above the trend line ever since. Okay? Now, even if price comes back down and breaks and makes a low, it would have to come down to break this line right here in order for it to be a direct low. All right, you're still within trend. However, like I said, you take your higher lows. If your lower highs are only the result of your higher low trades, you take your profit and you wait. Okay, but the trend is still being maintained. So if you drew your trend line from your last 2 new lows on your weekly, in this case, it's going to be your largest time frame. Guess what? The trend is still intact because all trades, ever since breaking below and breaking back above, the trend has continued. Okay. Now, another thing that you can do, and don't be afraid to use up your trend lines. So another thing that you can do is you want to match all your points. So for example, if you did this trade right here, you did a trend line right here, right? It tells you that the price has actually broken below the trend. That's okay. It broke below the trend. However, look at what it did. It broke below that trend line that you drew, but it also came and it found support at this 1 hour, 4 hour line. That's the support that it formed on Friday. So which means from that support, you're expecting now that, and if you're using that theory, if you're watching your trend, price to come and break back above your trend line, that is one of the reasons why now this lines up with perfectly with my TP5. So at some point in time, the price is going to break back above your trend line. No two ways about that. All right. And remember, your largest time frame is also your most accurate time frame. Now, with what I just said about price breaking back in trend, now look at what happens each time. So on your weekly, notice price came, it broke, it closed, it found support below the trend line. Notice price came back and it broke above the trend line. All right. And it just kept going. Okay. So it's the same thing here. You drew your trend line here. Okay. Price came, touched your trend line, came up, it broke below the trend line, found support right here. Okay. The green is actually a daily support line. So it found support right here, and then it continued up. Broke above the trend line, came here. It's here right now. It broke below the trend line, but it found support here on a 2 hour and a 1 hour support line. So, which means you're expecting that it's going to go back and it will break that trend line. Guaranteed. All right. So that was just a quick little lesson on your trend lines and how to use them and everything. Let me just take these off. But that's just a part of the analysis that we actually do. And the last thing that I want to mention is if you look at your 1 hour time frame and your 2 hour time frame, okay? I didn't highlight this earlier, but I just remembered it. Your 1 hour and your 4 hour actually share the same support. So the support line here is going to be 2417.4. That's on my 1 hour time frame. That's my lowest point on my 1 hour time frame. Well, going up to my 4 hour time frame, guess what? Same support. My lowest point that I can see right now on my 4 hour time frame is here. 2417.4. Okay. Let's look at the 5 hour. Lowest point. All the way up, let's go to the daily point. Now, of course, this is your lowest point on your daily time frame. Of course, it's a bigger time frame. However, that lowest point is actually a higher low in relation to all of these previous lows. All right. Same thing on the weekly. You're now at a higher low, but you have found support on your 1 hour, your 2 hour, your 3 hour, and your 4 hour time frames. All right. So again, just to finish up with everything, just to remind you guys, my bias is eternally bullish, which means any sells that the NASDAQ makes is a temporary retracement to create a higher low on my largest time frame. That transpired on Friday with my weekly making the largest higher low and expiring in line with the monthly time frame and every other time frame below it. So again, when the market opens, I'm expecting that gap up and I expect the price to continue running up, and I expect a strong bullish push. In the event that is not as strong as I'm anticipating and I only get a lower high, I will be taking my profits and I'll be waiting for the next higher low. So thanks guys for watching. I hope that you have a wonderful trading week. Continue to practice, continue to be patient, continue to block out the noise, and just trade your strategy. Just trade what you see and make sure that you continuously journal your trades and also continue to analyze and to spot the market trends, and don't react. Don't react to every news item that you hear out there. Be consistent, trust your strategy, and be patient and wait. So thank you, God, for your blessings. Thank you for keeping us. Pray that you'll beat anyone watching this video. May we have another successful week as we move into March, and may we continue throughout the rest of the year. We thank you and we love you. Amen. All right, guys, thanks for watching. I will see you next time.